So Jason, I'm going to turn it back over to you here. Now that we've kind of talked specifically about projected final costs and profit margins, what are some other things that you look for on the WIP?
So the other things that kind of tie in all together is over and under billings, job borrow, and then basically the cash graph that is within Fornovus. But we really, over billings, we don't dig too deeply in because we want to see contractors have over billings. Having an overbilling means that the customer is typically paying the job, paying for the job. Whereas having underbillings, that really means that you're not billed to progress and the company is having to pay for the job, the material, the labor, all of that, which is not good for the company. I mean, that creates some cash flow issues. The company may have to dig into the line of credit to pay for the jobs. And also underbillings could be an identification that there's a loss on the job. So we really are going to dig into those underbillings that are significant or material to the financial statements to find out just what's causing those underbillings. Most of the times it is going to be an issue of time. Just maybe the contract says you can only bill every 15th of the month. So if you put a lot of costs into the last 15 days of the month, you're not going to be billed to progress until the next month when you bill. However, those other instances will the client just has not identified those cost overruns properly. So there is a real loss on the job. Those are the types of questions and jobs we want to really look at. And then the job borrow kind of goes into the same circumstance. Are you, as the company, able to cash flow this project through the billings, or are you having to pay it out of your own pocket and possibly have to borrow from other jobs to pay for the current job that's not billed to date? And in past webinars, we've seen the money graph or the cash graph, and that kind of gives you a timeline of when costs have come in, when cash has come in, when billings have went out. And as long as we are seeing cash come in at a faster pace than costs are going out, then we're going to be cash positive. And the client will be cash flowing that job versus the company have to cash flow it.